It's not a predictive indicator. It's a rear view mirror indicator. So you got to always take those with a grain of salt because usually by the time you're getting the indication, it has already happened.
The FX Morning Mayhem podcast is an essential listen for currency traders. Each episode covers a curated watch list of key currency pairs alongside insightful market observations. It highlights crucial daily news events that could influence the market, ensuring traders are well informed. Additionally, the podcast offers valuable trading strategy tips catering to both new and experienced traders in the Forex market. This podcast is for educational purposes only. None of this info should be construed as investment advice. To see the trades called out live for free on our Slack channel, click the link in the description or scan the QR code to join the trade faction. If you find this podcast valuable, please follow and share with a friend. And now, on with the show. Good morning, everyone. It's Thursday, March 20th, 2025. And you're listening to Forex Morning Mayhem. It's time for the daily market briefing. In today's headlines, European markets are facing a downturn, with US futures also slipping into negative territory. This shift may be influenced by concerns over EU fiscal policies, a pullback following the Federal Reserve's recent meeting, and renewed focus on tariffs and trade. The US dollar has strengthened against major currencies, while the Australian and New Zealand dollars lag behind. The euro declines, and the British pound awaits the Bank of England's policy decision. Bonds are gaining traction, led by UK gilts, which are supported by economic data and discussions surrounding the spring statement. Crude oil prices are falling due to risk-averse sentiment, accompanied by declines in base metals. Looking ahead, key events include the US Philly Fed Index, jobless claims data, Japan's CPI release, policy announcements from the Bank of England and South African Reserve Bank, speeches from notable figures like ECB's Lane and BOC's Macklem, US Treasury supply updates, and earnings reports from companies such as Jabil, Micron, Nike, and FedEx. Stay tuned for a currency market update with Bill and Dave up next. Thanks for listening to Forex Morning Mayhem. Don't forget to subscribe and leave us a review if you found this helpful.
Starting with the currency pairs, Aussie New Zealand dollar, we're in a downtrend in the zone, waiting for a short sweet spot to form. Pound Canadian dollar, same situation. Singapore dollar, Swiss franc, in a downtrend in the zone, waiting for a sweet spot to form. US Canadian dollar in an uptrend in the zone, waiting for a long sweet spot to form. US Swiss franc in the zone, downtrend, waiting for a short sweet spot to form. So we've got a lot of stuff in a holding pattern here, pretty much is what I'm seeing. It's been a quiet week as far as signals are concerned. So, be that as is may, let's move on to the back to basics. All right, today we are going to talk about the relative strength indicator. And here you go. Are you familiar with this one at all?
Yeah.
Okay.
It's most of these are roughly the same thing. They stay within a band when they're in a band.
Right. This one is actually quite popular. I would say out of most of the oscillator type, whatever you want to call these things, this one is in the top 10, I would say. So this is how it works. The scale goes from 0 down here to 100 up here. And the default period for this is 14 period moving average.
Yep.
It's considered overbought if the oscillator is moving above 70, and it's considered oversold if the oscillator is below 30. A lot of people use this, it's what's called an RSI divergence signal. So first, let's show you how the signal works, and then I'll explain what divergence is. So here's a really good example where a lot of times the way the people will take a signal is it crosses under the 30 line and then crosses back up, which indicates that something is oversold and should be heading back up. And then I have the reverse of that right here, where it's gone over the 70 and then back down, which kind of transposes up to here like that. What a divergence is when the oscillator goes above the line and price goes in the opposite direction. Okay. It usually is a indicator of a pending reversal of some sort. So people like that one a lot. I found it to be, I don't know, 60-40-ish in results. All of these things are, you got to take them with a kind of a grain of salt because they're still backward looking indicators. It has to have had happen in order for this indicator to actually be created. So it's not a predictive indicator. It's a rear view mirror indicator. So you got to always take those with a grain of salt because usually by the time you're getting the indication, it has already happened. So either it might be too late or it might not be that accurate
Yeah.
or great. Yeah. That's just the way to think about all these things. And that's all I got for today.